Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through all the business news stories you need to know about from Africa and beyond. Let's start with a quick run through the markets here for you. Focusing on East Africa, Kenya's benchmark index down again today, but only marginally. 2443.85 is the number. The NSE 20 has basically shed almost 400 points en route to being about 24 points away from lows we've not seen in over 5 years. Also in the red today, the top 40 index of the JSE. At today's close, it's at a 5-week low. The mining index falling for the second day in a row. BHP Bulletin and Anglo-American down by about 1.4 and 1.9% respectively. Here's what's coming up tonight. Nigeria's central bank has fined 12 banks a total of more than $1.3 billion for not meeting its new lending target. UK legislators are debating Boris Johnson's new proposal for an exit deal from the EU. And the race is on for South Africa's newest R2 coins, celebrating 25 years of democracy. All that and more is in the pipeline for you tonight. But let's start in Africa's largest economy, where Nigeria's central bank has fined 12 banks an estimated $1.3 billion because they failed, apparently, to meet the minimum loan-to-deposit ratio requirement by the set deadline, which is at the end of September. Now, the Reserve Bank aims to boost credit to businesses and consumers following the recent recession in the country. It also raised the loan-to-deposit ratio today for commercial banks again to 65% this time. And that, of course, is designed to boost lending to the private sector. Banks have been advised to adhere to the set targets by the end of the year. And if they don't, they're going to have to maintain relatively high cash reserves at the central bank. Let's dig a little deeper into this particular story. Gabriel Idahosa is a Nigerian economist who joins us now live from Lagos with a lot more data on this story. Gabriel, how exactly do these fines work? Is it essentially a one-off payment that you make at the end of the year? Is it levied every single quarter? Give us a sense of the penalty structure here.
Well, it's not actually a fine. What the central bank does is to sterilize those amounts, which is to say that the central bank will not pay the banks any interest on those amounts. The amounts are kept by the central bank in a non-interest bearing account, and so it's taken out of their official cash reserves until they can raise the level of lending to the limits at any point in time. At that time it was 60%, now it is 65%, which they must achieve by 31st of December this year. So it is not actually a fine, it's what they call a sterilization of any shortfall in their lending. Mm-hmm. And so the banks still have the opportunity to now increase their lending to that limit out of those sterilized funds, but they cannot earn any interest from those funds, unlike other deposits the banks have with the central bank, which normally earn some amount of interest within the monetary policy rates.
Isn't it though a bit of a circular argument for the central bank though? Because on one hand, if you're taking this cash out of circulation, you're basically telling banks you've got a lot less cash to actually lend out into the real economy, into the private sector. So isn't that self-defeating, at least in that sense?
Well, I think what the central bank is actually saying is that the essential function of the banking system is to collect deposits from customers and lend that to the productive economy, and not just use them to buy treasury bills, which a lot of the banks have been doing for quite a number of years. So that's really where the central bank is coming from. They feel that the central bank is saying that the banks needs to go beyond just earning interest from treasury bills to pay their shareholders as dividends without lending to the productive economy. And that they ought to lend, they ought to upgrade their risk management capacity to lend effectively and not run away from lending and just sort of relax into continuous buying of treasury bills and just essentially live on the income they get from treasury bills.
Right, so quite a few...
It's not the CBN itself wanting to hold on to those funds.
Right, quite a few banks, though, didn't meet that 60% target, and now it's been raised all the way up to 65%. And essentially, if we're trying to raise the limits, essentially the loan-to-deposit minimum ratio up to 65%, but we've not addressed some of the main reasons why banks will say we can't lend into the market. We don't have a clear credit scoring mechanism. Recovery of non-performing loans is a problem. If the central bank hasn't addressed those issues, why is it raising the minimum LDR ratio?
Well, I think the reason is that out of the 23 odd banks in the system now, the majority of them have comfortably exceeded that lending ratio. So there are about 4 or 5 banks that have not achieved that ratio. And central bank is convinced that they can achieve that ratio within existing risk management frameworks that is approved and is in operation by the entire banking system. So this is an attempt to say to those banks that you just have to do what other banks in the system are doing. And the non-performing loans ratio at the end of the date when this review was done for the banking system as a whole has actually improved, has got lower. So the CBN seems to be standing on the fact that the other banks are able to lend, many of them in excess of 60%, and even now in excess of the new 65%. A good number, perhaps the majority of the banks, if you take the tally of all the banks, are doing it already. So it's like narrowing to a few banks that are perhaps slow because they have not reviewed their risk management systems to quickly increase their lending capacity. So it's a matter of timing. We expect that somewhere between now and the first quarter, end of first quarter next year, these remaining banks will be able to catch up and exceed the lending, because there's a whole issue of access to finance, particularly for small and medium enterprises, and which is the largest, easily by far the largest, 80–90% of the economy.
All right.
And this is the argument of the central bank, that if your colleagues are able to lend to this segment of the economy, why are these fewer banks not doing the same thing?
All right, we'll leave it there for the time being. Gabriel Idahosa, an economist in Nigeria, thank you for your time. Now then, the end of the third quarter came with news that the South African miner, Sibanye-Stillwater, plans to retrench some 5,200 miners at the shafts in Marikana. Now, in a country where unemployment is hovering close to 30%, job cuts of any kind, especially at this scale, they tend to be pretty sensitive. Now, while the number of planned cuts is less than the over 12,000 that had been proposed by Lonmin before its acquisition by Sibanye-Stillwater, the scale of the cuts, nonetheless, has caused concern in quite a few quarters. This was a reaction from the country's minerals minister.
You will meet him, but the most important thing is that when a government says we're going to return 5,000 jobs, that is an opening gap. And 189 kicks in, Section 52 kicks in. In that discussion, we most of the time reduce those numbers. The only instance where we didn't reduce the numbers was in Goldfields, because it was dishonest. By the time it came to Section 189 and Section 52, it has already made the decision. But if they're tabling those as proposal, they're engaged by trade unions, they're engaged by the department, those numbers will be less.
The world's fifth largest container shipping line, HapagLloyd, has launched its new South African operations in Cape Town. Now, the new service will start operating in November. It will offer direct links to a number of key ports and routes across Southern and West Africa. Here's CGTN's Travis Andrews with all the details.
HapagLloyd's new MEAC service has been aimed to tap into high-growth markets, boosting trade through direct connectivity between India, Nigeria and South Africa, all countries with a broad basket of commodities. The new route will create an additional service in South Africa and also add value to the government's efforts to rope in new investments that can begin to shape the economy in a positive manner. For the company, the route was an easy sell.
We are focusing on some of the attractive markets, which are India and Africa. So this, for us, is extremely important as it connects both of our attractive markets and is part of our strategy 2023. This takes the cargo to Ghana, from where we can distribute it to several other ports on the west coast. And also we are connecting the service via Jubilee to service the east coast.
Initially, 9 ships will be servicing the route, but that could increase as market demand increases. There's also greater integration between African countries and the Middle East. The benefits of the African Continental Free Trade Area Agreement, though, was one of the long-term value propositions that saw the liner commit to the route.
Many African countries have also signed a lot of joint agreements to do more and more business, like free trade agreements. So this service is an enabler for all that. And I think South Africa and West Africa, the connectivity that we now offer between South Africa and West Africa will also help the intra-Africa trade, which is going to be the next big thing.
With the second largest population of Indians outside of India, the South African city of Durban could particularly benefit from its historical ties with India, and that could be through a multitude of different goods, which could spell good news for the ailing economy.
Our internal market is just not large enough for us to propel us out of this current crisis, and therefore trade is the mechanism that is required in order to grow the economy and to create the jobs. So creating connectivity through shipping lines and shipping agents and operators are crucial in terms of creating an enabling environment for our traders to grow their businesses.
The first departures are set for early October and will follow a port rotation from Dubai through to Sri Lanka, Reunion, making its way to South Africa and on to Nigeria, and making its way back again. Along the way, taking some key commodities, including new ones that are going to these new markets for the very first time. Travis Andrews, CGTN, Cape Town.
All right, then I'll run through some corporate headlines for you. Let's start in South Africa. The government over there is in talks with coal mining firms which supply Eskom to reduce coal prices and cut operational costs. Now, the mining sector as a whole has faced a downfall in revenue attributed to high energy costs and load shedding. Still in South Africa, the insurer Old Mutual says its fired CEO Peter Moyo is seeking damages totaling $16.5 million. In response, the company is vowed to fight any such claim vigorously. Following the dismissal, the company's shares have fallen by at least 10%. De Beers diamond buyers have continued to reject stones from the largest supplier of that commodity. The company has extended almost unprecedented flexibility to ease what is a growing crisis. De Beers sold just $295 million worth of diamonds this month. That's 39% less than a year earlier. Now, concerns have been raised due to the profitability of the sale of rough diamonds. And finally, the South Korean tech giant Samsung says it has ended mobile phone production in China. This comes in the wake of intensified competition the company is facing from domestic Chinese rivals. Think of Xiaomi and Huawei. Recent data shows that the company's shares fell to 1%, market share rather, fell to 1% in the first quarter, down from about 15% in mid-2013. Samsung is set to shift production entirely as part of efforts to lower operational costs. That's a run through your headlines. You're watching Global Business Africa. Time for a short break. Here's what's coming up next. Hundreds of delegates are at the Africa Reinsurance Forum in Tunisia. We'll take you inside for the conversations. And we'll take a look at why Uganda's domestic textile industry is underperforming.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Incheon. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business. There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back. Tunisia is hosting the 24th African Reinsurance Forum with over 600 participants from both Africa and European markets. They're talking about a whole range of issues, low penetration rates in many an African market, as well as on the other end of the spectrum, how to ensure emerging risks like increasingly frequent natural disasters. CGTN's Adnan Chouachi is there.
Three major themes are at the center of the forum's works, namely international orientations and reassurance, new criteria challenges and compliance issues.
We come here because it's the Reinsurance Forum, which is the association of insurers and reinsurers meet together. And I'm here to meet some of my clients from all over Africa and Europe.
This forum presents an opportunity where we get to meet with our partners for business discussions and also for networking purposes, and also learning about what is happening in the industry.
The forum addressed governance in relation to insurance and reinsurance across the world, and more precisely in Africa. Experts say new legislation urges managers and heads of insurance and reinsurance companies to take into consideration dangers and accidents that have been on the rise over the recent years across the world.
Reinsurance is a challenge to the industry and all economic actors in Africa. There are new dangers like civil aviation accidents and natural disasters which happen frequently. We've been affected by floods and other catastrophes. Therefore, insurance companies need to be financially solid.
President of the African Insurance Organization noted that consumers have started to realize the benefits insurance offers in protecting their assets. However, insurance penetration still remains low in Africa.
Penetration is around 3% and even lower if we exclude South Africa, which represents 14% of the market. Insurance penetration is roughly at 2.1% here in Tunisia. Insurance and reassurance companies as well as finance ministries across Africa must encourage the population to buy the services.
The African Insurance Organization was founded in 1972 and is headquartered in Cameroon. It has 350 members from 47 African countries. Tunisia has hosted 3 international forums on insurance in just 2 years, with the participation of ministers and leading companies in Africa. Experts say insurance and reinsurance companies in various countries were requested to raise their capital and budget and to consolidate enterprise risk management. Adnan Shawishi, CGTN, Tunis.
Now, the 6th edition of the National Days of Cocoa and Chocolate has concluded in Abidjan, Côte d'Ivoire. Now, the objective of this event is to find effective ways that will allow Ivorian cocoa producers, remember this is the biggest producer of that commodity, to have a decent living wage. Here's CGTN's Terry Wangari with the details.
All stakeholders in the value chain of the cocoa sector in Côte d'Ivoire attended this major national meeting of cocoa and chocolate. During the 3-day forum, experts' revelations focused on finding solutions to the low-income problem of Ivorian cocoa producers.
Apart from the price of cocoa that must be increased, producers need to put in place good agricultural practices. There is also a need for lobbying so that everyone in the industry is interested in the issue of necessary income. It should be noted that cocoa consumers who are at the end of the chain are increasingly interested in the fact that peasant producers of cocoa bean benefit from a much more lucrative price.
After this day, we will continue to work and see how we can produce good quality and also move towards the transformation into finished products of our cocoa production, taking into account the protection of the environment and finally carry out social actions for our farmers.
Côte d'Ivoire is the leading producer of cocoa beans with 40% of world production. However, only 30% of the production is locally manufactured, a challenge that Ivorian cocoa producers want to tackle.
Today we face the challenge of transforming our cocoa. We are testing the local market right now, but to better transform we need suitable equipment and logistics. But the cocoa processing equipment is still very expensive. We now want a subsidy from the state to just have the essentials, which would be a big step forward for the transformation of Ivorian cocoa.
The projects initiated focus on cocoa processing to increase added value in the value chain in the cocoa sector, the fight against cocoa crop soil and shoot disease, and the search for a common strategy between Côte d'Ivoire and Ghana. Discussions with Ghana have allowed undeniable progress. The adoption by the two countries of the floor price principle indexed to the search for a decent income for the benefit of cocoa producers and their families is a major revolution in fair trade.
The problem of child labor in cocoa plantations was also at the heart of the forum. The West African country's Minister of Agriculture says that the government is working on eradicating child labor in the country and is set to release a reform agenda to curb this practice. Terry Wangari, CGTN.
Over to East Africa now. Uganda's attempts to breathe life into its textile and domestic fashion industry is still pretty shaky at this point. Imported second-hand clothes still dominate the sector. They're still very popular in the country, partly because of their price. But efforts to ban used clothes or increase tariffs on them has threatened to sour trade ties with countries like the United States, a key source of said second-hand clothes, and those policies had to be reversed. CGTN's Alexandra Majada takes up the story.
Uganda, like most East African nations, has a thriving second-hand clothes market. The clothes come from charity shops and thrift stores in Europe and the United States. Occasionally, they're in such good condition that an original price tag is still attached. Many argue that apart from providing quality products, the sector creates employment for Ugandans. Rose Natabi has been selling used clothes at various markets in the city for over 5 years now.
The clothes sold in shops here don't last long. The fabric is washed only once and after that, tears. These used clothes are durable. They've already been used before, but they're better than most made here in Uganda.
The second-hand clothes trade is common across Africa, with Ghana, Tanzania, Benin, Uganda, and Kenya among the biggest markets. While traders say the business provides a practical solution for low-income earners, Critics argue that the practice prevents Africa from building its own industry because it's flooded with cheap imports.
If at all second-hand is still banned from the country, it would also be amazing. It would help out in one way or the other, because at times there are things that are imported into the country, yet there are things we can do as designers, as people in the country, other than just clothing. Lots of things are imported, and yet these are things that can be produced, which makes the citizens lazy. It makes people stay comfortable because they know, we shall get this.
The used clothes business is said to be growing in Africa, partly because of the U.S. African Growth and Opportunity Act, or AGOA, which allows African nations to export to the United States without duty. The agreement also sees the continent importing second-hand clothes from America. Kenya, Tanzania, Rwanda and Uganda all increased duties on used clothing and shoes in 2016 to nurture their local textile industries. But in March 2017, the Secondary Materials and Recycled Textiles Association, a trade group representing U.S. used clothing exporters, filed a petition arguing that the increase violated AGOA. Though they contested SMART's assertions, Kenya, Tanzania and Uganda all backed down and agreed to roll back the duty increases. But Rwanda refused, and as a result, the country's right to export clothing duty-free to the United States was suspended.
But in terms of the benefits, we know that since the United States has raised alarm, they're actually benefiting from us importing second-hand clothes. And the benefit goes to a tune of about 151 billion US dollars just from the ESC, because that's about how much we spend importing second-hand clothes. And when you compare that with the amount of money that we actually gain from this particular trade, it's about 231 million US dollars. So it's really the US that is benefiting.
Uganda says it's working on a strategy to boost its cotton, textiles and apparel sector and plans to create about 50,000 new jobs in the process. Alexandria Majala for CGTN.
Still on textiles, traditional weavers in Somalia are battling a flood of inexpensive clothes and textiles imported from abroad. Although the market for second-hand clothing keeps hundreds of thousands employed across East Africa, not just Somalia, many local textile industries are pretty much dead. CGTN's Daniela Pearson has more.
A workshop tucked away in a neighborhood of Somalia's seaside capital, Mogadishu. Here, Abdullah Ali weaves a textile known as a lindi. There was a time when this traditional fabric was favored by Somalis of all ages and backgrounds. But now, younger generations are adopting Western styles, and cheaper textiles can simply be imported from abroad. Second-hand clothes from Europe and the US have also flooded the market, leaving handloomers like Ali with an uncertain future.
I have been working on this craft for 40 years. I only earn a total of $2 each day. I do not know what to do with that money because it is not enough. I have bills for my family, and if one of my kids were to get sick, I cannot buy medicine for them.
I do not know any other professions like masonry or carpentry. I only know how to weave, but there is less work now.
Somalia isn't the only country facing this problem. Many textile industries across East Africa have collapsed over the past 30 years. They simply could not compete with the cheaper imports.
I buy these clothes to promote local production and encourage them to make more clothes. I spent $29 for 4 pieces.
East African governments have tried to impose higher taxes on imports to boost local production. But these efforts have been met with threats of reduced business by countries like the US.
These clothes are much better than the imported clothes because their quality is better since they were woven by hand. The market is not good these days. I will keep marketing traditional clothes and telling people that they are not that expensive.
Although the cheaper new and second-hand clothing is a multi-billion-dollar industry in Africa, many still believe that the preservation of local fabrics is worth fighting for. Daniela Pearson, CGTN.
It's about 18:30 GMT, time for break. Here's what's coming up next. UK legislators debate the Prime Minister's new proposals for an exit deal from the EU. And we'll explore why France says it's ready to take a tougher stance if the US rejects a proposal in the Airbus versus Boeing trade dispute.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
For a look at some economic data out of the country, the country's foreign currency reserves.
With a dedicated and diverse team of anchors, CGTN now brings Africa to the palm of your hand.
I'm Perina Karibe in the heart of Nairobi, which is bustling.
From everyday heroes to the continent's most powerful figures, we bring their voices to you.
We haven't changed. And this is something most of us are very excited about.
We bring you news that's changing perspectives.
From Nairobi's city center.
News that brings Africa to the world. CGTN. See the difference. How will your world change today? What happens here? What happens there? Or what you make happen for yourself. If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Accra is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
See, business in Africa is high risk.
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town. And I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Incheon, and I'm a business anchor and reporter at CGTN.
Welcome back. Let's recap the stories making headlines at this hour. Starting in the French capital, a police administrative worker has stabbed and killed 4 people in a rampage. The officer was later shot dead by security officers. The incident happened in the capital near the Notre Dame Cathedral. Now, the area where the attack happened has been entirely sealed off. Lawmakers in Hong Kong have set up a committee to push for an anti-mask law as violent protests in the city continue to escalate. The Legislative Council members say this will not affect people's right to wear masks in public or legal gatherings, but committee members also admit at the same time that the government and even the police may not have the resources to implement such a law. And in Somalia, the United States has reopened its embassy in the capital, Mogadishu, nearly 3 decades after it was closed. The new embassy will be located at the heavily fortified airport compound in the Somali capital. And Mogadishu and Washington see the reopening as a major step in improving ties between the two countries. That's a run through your headlines. Right, then on to the business of Brexit now. The British Prime Minister, Boris Johnson, says Brexit proposals that his government has made are essentially a compromise and a resolution that both sides can agree to. But that agreement is still some way off. While speaking in Parliament, Johnson added that the Irish backstop had to go and that the EU had, in his view, reacted constructively to his proposals.
This government's objective has always been to leave with a deal, and these constructive and reasonable proposals show our seriousness of purpose. They do not deliver everything we would have wished. They do represent a compromise, but to remain a prisoner of existing positions is to become a cause of deadlock rather than breakthrough. And so we have made a genuine attempt to bridge the chasm, to reconcile the apparently irreconcilable, and to go the extra mile as time runs short. Our starting point is that this House promised to respect the referendum before the vote.
Right, then, got a bit to get through as far as this particular story is concerned. So let's bring in our correspondents, CGTN's Newwest in London and Bruce Harrison live in Brussels. Bruce, let me start with you. So initial reactions from your end of the world, less than rosy. Walk us through some of the initial objections we're seeing to this latest proposals from the EU Commission and members of Europe's Parliament.
Well, Ramah, you're exactly right. It's certainly been less than rosy. We heard just now from Michel Barnier, the Brexit's chief negotiator here from the EU, who spoke to the 27 members of the EU that will be remaining. And he told them it's going to be difficult, if not impossible, frankly, to see this deal coming to fruition. This deal proposed by Boris Johnson. Guy Verhofstadt, the chair of EU Parliament's Brexit Steering Committee, equally as pessimistic, saying this is a basically repackaging of bad old ideas and floating them once again. What it's coming down to really among these big voices here in the Brexit negotiations in Brussels are concerns about customs. The EU parliamentarians, as well as the Irish Prime Minister, Leo Varadkar, all want to see this backstop maintained, and there's three principles that define that: maintaining an all-island economy, the single market, and then respecting the Good Friday Agreement. And basically what they see from Boris Johnson is a complicated customs system that wouldn't protect those principles, basically because, despite what he says, there's going to be border checks in some form, and ultimately they fear that that could lead to a return to violence on the island of Ireland, as we've seen in the past.
Indeed, of course, border checks by entirely another name. Naweed, the Prime Minister's proposals, though, they want to keep Northern Ireland as part of the UK customs territory, so to speak. But the Prime Minister says, and I'm quoting him here, there will be no checks or infrastructure along the Irish border. But at least on paper, even if he pulls that off, that's a massive opportunity for smuggling across the border, isn't it?
Yeah, Ramah, well, that's one thing that the Prime Minister was trying to assuage when he announced these plans yesterday. Essentially, the first thing to remember is that this will only apply to goods. It won't apply to people, which harks back to the delicate nature, sensitive political nature of the Irish issue. Remember, they only signed the peace agreement, the two sides, in 1997. In terms of goods, the Northern Irish economy is a small business economy. So what the Prime Minister here is saying is that a lot of these checks can be done away from the border, perhaps in small factories, or in certain cases for some small traders, there may not be a need for checks at all. When he wrote this letter to the European Union yesterday, the Prime Minister said, according to his figures at least, the government figures, of all the trade between the UK and the EU, only about 2% passes through the Irish border, worth about $5 billion. So as far as the Prime Minister's concerned, perhaps the amount lost to smuggling will be so small relatively that it wouldn't really be worth jeopardizing this whole withdrawal agreement for. But having said that, this isn't just about money. There is a lot at stake on both sides. But really, I think what the Prime Minister has been trying to do with this is to form some sort of a starting point here to try and push negotiations forward. But the clock really is ticking with that all-important Brexit summit in Brussels set for the 17th of October.
Indeed, and that's certainly a date we'll be keeping a very close eye on. Bruce, the EU Parliamentary Group has been dealing with Brexit, rather, has been critical, as you mentioned, of these proposals. But politically speaking, this does represent a trap of sorts, doesn't it? Because if they do rebuff this latest offer, they're essentially giving the Prime Minister, Boris Johnson, the ammunition, so to speak, to say, look, the EU doesn't want a deal. They clearly want us out. Let's just crash out on the 31st of October.
Ramah, there are a number of reasons I would say that this could be perceived as a trap. One being that Boris Johnson's tone changed dramatically from earlier in the week when he was addressing his party loyalists, saying this was a take it or leave it measure. And then when the letter actually was delivered here to Brussels, as well as the text, it struck a conciliatory tone. And he presented this as a great compromise, that he was almost doing the EU a favor by taking the steps he was, and he was expecting compromise in return. So it kind of puts the onus on EU parliamentarians, it would seem, to take some sort of reciprocal gesture. But ultimately, I think people on this end of the negotiating table may be perceiving Mr. Johnson negotiating in bad faith or being disingenuous. It's unclear if he'll be able to even get the deal through his own parliament. And at the end of the day, ultimately, it looks like he has presented a deal based on what we're hearing here in Brussels that simply does not meet the demands that they have repeated time and time again. I don't think the parliamentarians and the other officials here want to be seen as immovable or unable to negotiate with, but they have to stick to their guns, they believe, and I think ultimately they will do so.
Right, Naweed, the Prime Minister and his ministers, we've heard these arguments from his Brexit Secretary, from the Chancellor of the Exchequer. They say they will obey the law, but the Benn Act compels them essentially to seek for an extension if there is no deal by the end of October. But at the same time, the Prime Minister says they want to get the UK out of the EU by the end of October. How are they going to square this circle?
Yeah, it's a question that's really left a lot of people scratching their heads here in Westminster and indeed across the country, Ramah. And the reason it's important is because for all of the warm words, it's interesting, Bruce mentioned a change of tone from the Prime Minister, for all the positive, warmer words we've heard in the past 24 hours from both sides, it must be said, compared to what we were hearing a few weeks ago. Time really is the key issue here. There are only 2 weeks until that Brexit summit on the 17th of October. So even if Mr. Johnson gets that deal signed with the EU, he'll have to come back here. And by the 19th of October, he has to get Parliament to approve it, or he needs to go back to Europe and ask for another 3-month extension. Now, as you say, he said that he's going to respect the law, but that he won't ask for an extension. There have been some reports, perhaps that another member of his government may write a letter instead asking for an extension. But really, there isn't any clarity on what Mr. Johnson plans to do. He has been challenged. It must be said, several of his ministers have also been challenged here in media, asking them what they plan to do about that, but there hasn't really been a clear answer. So realistically, what we're seeing now from Mr. Johnson, instead, the arithmetic in Parliament could be changing. There is a tiny glimmer of hope for Mr. Johnson, perhaps with some Labour MPs, some of the opposition MPs, perhaps willing to back this new deal that he's announced yesterday, the new proposals, if they're shored up, if there's more support from the EU side as well. I mean, these are big ifs still remaining, but the focus for Mr. Johnson now is really, to answer your question, not to square the circle at all. It's to get a deal, to bring it back here in Parliament and push it through with opposition support.
Indeed. One last question for you, Bruce. Lots of unknowns, many ifs needed to essentially try and square this circle, as we just pointed out there. But is there perhaps a sense in Brussels, an acceptance that come October, given the amount of time that they have left to work out a deal, the UK is just going to crash out?
I think outwardly here, there's a sense that there is perhaps still a possibility to try and craft some sort of arrangement. As I mentioned to your previous question, EU parliamentarians, officials here don't want to seem that they're unable to negotiate or they aren't willing to try and consider what's on the table. But what you're hearing more behind closed doors and in private is about a growing sense of fatigue, and they're simply worn down by this process that has lasted 3 years. That being said, they do want a deal. They don't want to see the UK crash out. They want to avoid all the chaos that would potentially come with that. And many studies have shown, especially along the lines of trade and other economic issues, it could be quite disastrous for the EU and take a hit to the to the UK and also hit the UK economy as well. But at the end of the day, like I said before, they're going to stick to their guns, their principles regarding what they think is best for Ireland and ultimately the EU. And the chips may fall where they will at that point.
Indeed. Tick-tock, tick-tock. The time is running out. We'll leave it there for the time being. Bruce Harrison in Brussels and Louis Jabal Hill, of course, live in London. Thank you. Now then, speaking of trade issues, let's focus on the EU and the United States. The French Finance Minister Bruno Le Maire says that France and the EU will be ready to respond with sanctions if the US is to reject the hand extended by Europe in the Airbus trade disputes. Now, on Wednesday, Washington said it would impose 10% tariffs on European-made Airbus planes and 25% duties on a whole range of other goods, wine from France, whiskies from Ireland, for instance, and cheese from right across the continent. Now, essentially, that's punishment for illegal EU aircraft subsidies. Tariffs take effect on the 18th of October. They come after the WTO gave Washington the green light to impose penalties of $7.5 billion worth of EU exports in this long-running case. Now, the move is expected to ignite a tit-for-tat transatlantic trade war of sorts. The US trade representatives' target list for EU tariffs include, of course, as we mentioned, Airbus planes made in France, Britain, Germany and Spain. Those are the 4 Airbus consortium countries. Now, with its enormous coastline, Russia aims to increase the production of farmed fish and seafood. It hopes to produce enough for its domestic market and for export as well, with China being a key target market. Take a look.
A catamaran is fighting its way through the rough Barents Sea, just outside of Kola Bay. It's heading from Murmansk to the largest sea platform close to Kildin Island. Almost 3 million salmon are grown here in the cold and pristine waters.
Every net cage contains between 150 and 170,000 salmon. The cage goes 20 meters below the water level, and the fishes there are perfectly free. They are in the same water and the same environment as the wild fish.
Russians here are learning from Norwegians how to farm salmon, and they hope that combining that experience with a clean natural environment, they can produce outstanding products.
It's an ecologically clean product. This is especially good because Russia has established that image in the market of regional consumers. Due to the relatively small population and clean nature, our products are eco-clean.
It is Asian consumers they are aiming at. Salmon prices there are higher than anywhere, making it the most attractive market in the world.
In the long term, strategically, China is also a very important market for us because it is close to Russia. There is railroad connection between Russia and China, and the consumption of salmon in China is expected to rise several times. So this is the place to be, and we want to be in China.
But that plan comes with a catch. Even from the Soviet-era times, Russia is struggling to produce enough of fish and seafood products to satisfy its own needs. Now, with some Chinese investments in the far east of the country and some domestic efforts, producers hope to at least narrow the gap. And yet, the local producers are saying that it is economically viable for them to export part of their production to China. It'll bring them more opportunities to achieve higher profits and, at the same time, to supply China with the products that are in demand there. Just recently, the first test delivery was sent from this farm to China, and more are expected to follow. Alyosha Milenkovic, CGTN, Kildin Strait in the Barents Sea.
South Korea's Incheon International Airport has consistently been ranked as one of the world's top airports. Now it wants to lead the way when it comes to creating a green, eco-friendly environment. Tech obviously plays a big part to it, but so does something a little old-fashioned: gardening, turning the airport essentially into a green horticultural wonder of flowers, microforests and water gardens. CGTN's Jack Barton has this report on what's hot tonight.
Coming into land over Incheon Airport's 34,000 square metre sky garden, studded with walking trails and lookouts for marvelling at the flowers and the almost scarily low-flying planes. The passengers are also met by greenery as soon as they exit the plane. The two main terminals contain almost 500 flower beds and more than 700 plant pots containing species of all sizes. There are many other green features and it's a work in progress, expanding every day. It's the biggest landscape gardening operation in South Korea. Almost 90 specialists tending to almost 300 million plants and trees. Landscaper Jun Ga-hyun tells me Incheon's new Terminal 2 building was designed as part of a low-carbon eco-concept.
Landscape is the most important element in the eco-concept. For example, the bright light of the garden environment behind me. We organized the terminal environment so that the landscaping plants could grow well, including natural sunlight coming in from the airport ceiling.
The plants help reduce carbon and clean the air. And whether having a nap or an online chat, the green areas clearly have a soothing effect.
I think it's much livelier and the atmosphere is much better. There are trees and flowers rather than marble on the floor, so I think it's better for children to see and touch.
With the rapid growth of air travel over the past few decades, airlines and airports have come under fire for the massive amount of carbon they have added to the atmosphere. The measures at Incheon don't and won't totally address the issue, but many are welcoming the fact that at least here, greener aviation policies have finally been given the clear for takeoff. Jack Barton, CGTN at Incheon Airport, South Korea.
All right, then a quick run through commodity prices here for you. Brent crude, these are prices we haven't seen really since Q4 last year, start of the year, that sort of thing. So Brent crude still falling, down at least 1.7% to 1511 GMT. Essentially, most of the gains, if not all of them, for 2019 wiped out at these levels. At these levels, in fact, it's only 3% higher so far in the year. Cocoa futures also in our focus. They've been rising steadily since August. That trend continues today, nearly 1% higher at 1530 GMT. The contract on that basis is up about 1.5% so far in the year. Here's what's coming up next. The race is on for South Africa's newest R2 coin, celebrating 25 years of democracy.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
One final story for you tonight. The South African Mint is calling on the public to design a special edition R2 coin. This is part of the ongoing celebrations to mark 25 years of democracy. The Mint is owned by the Reserve Bank of South Africa. It releases commemorative coins to mark significant events or honour outstanding people. CGTN's Julie Shai has that story on Grassroots.
South Africans are being afforded the chance to design a new 2 Rand coin, which is linked to the Bill of Rights. It forms part of the Mint celebration of 25 years of democracy, and it will be in circulation next year.
I would like to see something shows pride, strength, culture. I would like to see the coin. The coin, they must put something like a head of a woman who symbolizes strength.
I'd like to see to put Ora Tambo. The reason why it is very important for everyone in country to travel is good for everyone as an international airport. I can travel anywhere, like overseas, through Africa.
I think people in South Africa don't value or treasure the peace we have, and something as simple as just a peace sign on a coin to represent the years of democracy and how actually that transition happened peacefully.
Since June this year, the Mint, which is owned by the Reserve Bank, released a set of commemorative coins to honor South Africa's democracy and liberal constitution.
So the 27 rights, we could only do 5 of them. So we were really surprised by the goodwill and the attention that this got from the public. So we decided that to close it off, we are actually going to ask the public to choose their right, their Bill of Rights that can really resonate with them.
The competition runs until the end of October, when the best design will be chosen.
Make your design, keep it as simple and as visual as possible. You can use any medium, whether it is a pencil or on electronic design material. You have to then upload it on the website and explain your thinking behind it.
It's the first time ordinary citizens can stamp their mark on the currency. There is no money to be made, but it will be a valuable piece of history in the pockets of South Africans. Julie Shara, CGTN, Johannesburg, South Africa.
All right, then a quick run through the currencies here for you. So East Africa, the Kenyan shilling, essentially testing that 104 level again today. 103.925 to the dollar was the highest it actually went. And these levels actually about 2.7% weaker to the American dollar. The Kenyan corporate market largely dead for the most part for the last 4 years now. So its first green bond was bound to get a fair bit of attention. A property developer came to market looking to raise $50 million in 5-year secured debt. 12.25% was the coupon rate on that. 85% of the money they were looking for, they did get. For comparison though, yields on Kenyan government 10-year debt is around the exact same level. We'll see how that performs and update you. That's it for tonight's edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen on the program. There's several ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital.